Good morning, folks, and welcome back to Almus Market Mornings. We are in a situation where there is strong optimism building up on the US and Iran negotiations. Markets have been stable with a bias towards risk assets, and yields have moderated a bit. The updates are similar to what we discussed yesterday, with minimal market movement due to a US holiday. Domestically, the risk sentiment has seeped in as well. Rupee had a good show, strengthening to 95.10 before closing around 95.30. Stocks also have a good show in the past couple of sessions, with Nifty doing reasonably well. Good morning, JK. In this wait and watch kind of situation, are you reading anything between the lines?
Good morning, Swaraj. So what we have seen is a big relief rally across markets yesterday, stocks, bonds, and currency, and of course, led by oil price falling more than 5%. And this is after what seems like a peace deal that, of course, is not yet signed, but is expected to be. And it also envisages many thorny issues to be negotiated over the next 60 days. Now, that's the initial reaction from the market, but then it's also the time for today to reassess because there have been other developments that we should be aware of. Iranian Foreign Ministry spokesman said conclusions have been reached on many topical issues, but that did not mean that Tehran was close to signing an agreement. That was one point, and there can be, there was also a report of US forces attacking in southern Iran as a retaliatory action or as a defensive action. So that we some indication to the market, or rather awareness to the market, that all is not ended. It's still a long way to go before they could, assume that things are back to normal. And for me, particularly, so long as oil stays above 90, it is not a relief for many oil importing economies like India. And therefore, euphoria may also, get moderated, or it may even stop for some time. However, there can be some steam left in the rally today, as UK and US markets did not participate due to the holiday yesterday. Japanese Nikkei yesterday hit high above 65,000. And apart from the war-related positivity, the additional budget of 19 billion, which the government has pushed, also being seen as a positive for the market. Europe saw 1% gain, highest level in 2 months, recovering all of its losses since the start of war. India NSE also seen 1.3% gain. Investor positivity boost by not just the oil fall, but also due to the steadier rupee, which has been achieved through strong RBI intervention. Now, question is whether we have turned the corner in the markets. I think we have a long way to go. And what has happened is that both countries have bought time and perhaps making some concessions in the near term. Definitely, there will be difficulty in surmounting the tougher part of the contentious issues like nuclear disarmament, which Israel is insisting as a precondition for any stoppage of war. There can be some skirmishes with the less frequency, like the one we mentioned earlier. There is also the risk that militant groups in Iran take a tougher stand on contentious issues and hinder the peace process. So, as I said, just the relief rally that we probably have made one more step towards a peace agreement, but not signed it, and there could be many stumbling blocks ahead before that can actually become a deal. So the markets will be back to watching headlines on the progress and perhaps take further gingerly steps, knowing that the risk of re-escalation is not zero. At the same time, technical traders should be aware of the fact that oil prices have broken important trendline support, which can lead to a selling on rally unless it again trades above 102. And as long as, of course, it stays above 85, importing countries will feel the stress on business and fiscal also. The broader dollar lacks a direction. It could weaken a bit more if peace deal is eventually signed, but later may return to watching US economy, which has been steadily outperforming. We'll have the PCE core inflation for the month of April later this week. And importantly, monetary policy approach under Kevin Warsh will be on the radar because it may well turn out to be higher for longer in US economy, not just based on the inflation, but also because the economy itself has been doing well. And there is no strong case for cutting rates. And as far as the local market is concerned, rupee strengthened for the third day in a row. PSU selling was seen again, but we broadly held the support zone between 95 and 95.30. Buying and selling interest was somewhat matched. There is a focus on RBI Governor's media statement saying rupee has become undervalued. While RBI is not targeting any specific level, he emphasized that central bank stands ready to intervene if speculative pressures build up. So, kind of a rare statement which comes amid the turbulence in the rupee market. Market was also looking at, interestingly, at finance minister's statement that the government is open to reevaluating tax system and will listen to the stock market investors' demands and inputs. What she said was, we are ready to hear, listen to people, and we'll take their inputs. So actually, it does not mean that there is any indication that the government is considering something. It is just that we consider the market's views is what she has said. So rupee could spend some time in the current range above 95, with further moves definitely depending on global headlines and oil. Lot depends on now corporate actions, who have only been on the buying side so far. No inflows have been seen. Considering the positioning in the market, I feel any rally towards 95.80 can probably attract selling in the broader market, including corporate selling, provided the global situation remains relatively calm. So I'm slightly biased towards some more recovery in the INR. So we have, of course, also had central bank still continuing to consider measures. And yesterday, interestingly, there was a meeting between bankers and the central bank where they indicated that they are ready to subsidize the hedging cost for swaps if corporates are raising money abroad, so up to 150 basis points. And there is a suggestion that if this is done, although there is demand for more than 150 basis points, but there is a suggestion that if any such subsidy is given, we could see ECB flows of up to 50 billion. So that's something we will keep tracking. However, as of now, I think 95 holds until we see more development from the Gulf. Thank you.
Thank you, Jack. And yes, so broadly from the rupee, more strength is expected. We have strengthened for 3 days in a row. Government has also made a statement that the governor, sorry, has made a statement that rupee has become undervalued, though they do not target any specific level. It's just any sort of intervention is only to curb speculation. At the same time, finance minister has made a statement on listening to essentially the stock market investors to maybe to take action into the taxation structures for equities. Broadly, otherwise, global markets relief rally is the theme. There have been, Iranian foreign ministers also saying that, agreements have been reached on many issues. But it doesn't really indicate how close they are to signing a deal. Uh, Meanwhile, on the geopolitical front, US had a defense action yesterday. It was some sort of a retaliation in southern Iran. That sort of, as of now, it doesn't seem to bother markets much. So broadly today, every market will be back. US and UK, which were closed, along with some, I think South Korea was also closed yesterday. All of them will be back and they may participate in this relief rally. And till the time we get any further updates, that theme should carry on. That's it from us today. Thanks for listening. We will catch up tomorrow with a fresh round of updates.